what makes the crypto exchanges successful? Yeah, why customers switched from one crypto exchange to another? What is the future of crypto exchanges? And what is the core product? Is it security or user experience or what? And do we need decentralized exchanges or not? This is just to kind of vitalizing questions. It's up to you how you run the discussion. The panel is decentralized. Who wants to start?
Yeah, hi. My name is Vitaly. I'm a UK Executive Director at CX.io. We are a UK-based crypto exchange on the market since 2013, so I would say we were kind of one of the pioneers on the market. And before I start answering your question, I'd actually like to support what Jeanette just said on the previous panel regarding the liquidity. Because
guys, you're too loud there. Please move somewhere, okay? Roma, please help to make calmer. Okay, sorry.
No worries.
Or we should speak louder.
No worries, sure. Yeah, so like a lot of guys in this room, they are actually at this event because whether they are planning to do an ICO or they are in the process or they just done it. And the thing is, like, I approached pretty much like 15 to 20 times a week by different ICOs with a request to order their token on CX.io. First of all, I would say that we don't list any ICO tokens, so yeah, just if you are interested in that, just come back to me probably summer, autumn this year. But what I would say regarding the previous panel on liquidity, it's not actually that liquid, the ICO tokens, and it's actually becoming harder and harder to list your token on the exchange. And coming back to your questions regarding the future of the exchanges, what we see on the market right now, and we are actually are in the dialogue with a lot of regulators around the globe. We are, as I said, a UK-based company, and we are in the dialogue with FCA also. What I think will be going on in the nearest like 6 to 12 months is we're going to see a lot of regulation coming specifically to the exchange part, exchange business. And we'll see a lot of regulators around the world coming up with the regulation for the exchanges. We've already seen that in terms of KYC and AML procedures, but I think we're going to see more regulation in different spheres of the business.
So I can add that as well. So hello, good morning. My name is Mike Kayamori. I'm the founder CEO of Coin. We operate a centralized exchange. We're the only global exchange that is listed and registered in Japan with the Japan FSA. As he mentioned, there's going to be so much more regulation. It's going to happen everywhere, starting from Japan, Singapore, Philippines. G20 is going to talk about a joint regulation in March. So it's going to happen because this is where cryptocurrency and other cryptocurrency, or cryptocurrency and fiat exchange hands. Right? So it also, there's going to be two distinct paths. One is centralized exchanges that will be regulated under the guidelines of KYC, AML, under the OECD or FATF. And then there's also going to be decentralized exchanges that don't take on any custody of customer assets, and it's a peer-to-peer transaction. But that's going to be a challenge if you become large, because no government, no tax official will allow an unregulated exchange to exist in scale, right? So it's still the Wild West right now, but it's happening. It started in Japan, it's happening throughout Asia, and it's going to be global. So that's a trend that's not going to stop.
Yeah. And I would add to that it's actually already happening in Europe specifically.
True.
Several jurisdictions in Europe already introduced regulation for crypto exchanges, and I know for sure that several are coming.
Can I jump in? Okay. Hi, I'm Kangmo from Korea. I was a CTO at Corbett, but I left now. Left Corbett now, and I'm running on a non-profit organization called Give People the Power, which empowers each individual by minimizing unnecessary high fees paid to financial institutions. My viewpoint about the centralized exchange and decentralized exchange is currently centralized exchanges are used more because it is first, it is fast and easy to use. And two, many governments think that, okay, we can do KYC, AML on the exchange customers. So governments think it is okay. But whether decentralized exchanges are allowed or not is not something allowed by government or something allowed by some country. But decentralized exchanges can be built by anybody. Meaning, whenever I meet someone in person and I can exchange my fiat currency into Bitcoin without any regulation. So decentralized exchange means if you have your coin, you can exchange your coin into another coin without having central server. So nobody can shut down the decentralized exchange. So my viewpoint is it is very hard to shut down decentralized exchange and regulate exchanging currencies between individuals. That's my viewpoint.
I'm going to add to that. So my name is Samson Lee. I'm the founder and CEO of CoinStreet. We are the ecosystem enabler helping companies to be successful in the blockchain area. So our service, starting with ICO advisory from white paper to private sale, public sale. We also offer a white label exchange, focusing on our platform is focusing on the traditional brokerage firm. Because we think there's crypto guys doing crypto exchange and there's traditional brokerage firm, and we will merge. So our solution is more focused on the brokerage firm, help them to do crypto exchange in the future. We also operate two funds, one in Singapore, one in Hong Kong, under regulation of MAS and HKMA. So I totally agree that regulation will be coming in more and more for the exchange, because mainly because the government need to really protect the small investor, right? Some of you might have read the news about China yesterday. There's another big ban of ICO service in China, which is expectable, right? But reason being is that there's one coin is called ARTS. So it's ICO listed, and the coin fell from 66 cents to 13 cents in the first day of ICO. So there's a lot of angry investor in China. So they're coming out and protest. So the government really need to do something to protect the smaller investor, right? And I think now, very effectively, what they do, although without the regulation is coming, but before the regulation, now they really have a very strong control on the fiat to coin control, right? So you're doing just coin to coin, it's okay. You know, you can play. It's a wonderland. But as long as you touch the fiat, money going in, money coming out, there's a strong control. A lot of the exchange, even the bank account got shut down, so people cannot take the money out. So I think the regulation definitely is coming, and actually it will be good for the market because it helps to provide a more healthy environment.
That's a good point that sometimes banks just close accounts for exchange, and clients can withdraw cash, right? And what is the option for exchange if banks just closed account? What exchange shall do? Is there a kind of safe haven for exchanges with banks ready to open accounts?
Hi, myself is Akash Agarwal. I'm the founder and president of Global DCX. We are an exchange focusing on emerging markets. I'll add to it, like The bank's main worry is KYC and AML. As an exchange, you should be having a separate department for your KYC and AML and having the right experts on it. You should be sharing your data with the bank, which give them the comfortability that we are following KYC and AML and it's up to the par as per the regulators. And that will give a lot of confidence to the regulators, to the banks, to the payment providers, payment gateways, everybody.
Yeah, so let's discuss this transparency of exchanges for tax authorities and so on. So what is the trend? How many exchanges are now reporting to tax authorities and other regulators? Yeah, please.
Well, so I wanted to add, because even if exchanges do KYC, AML, banks will not extend banking services to you.
Absolutely.
Right? So we are a regulated exchange in Japan. We have one of the best KYC, AML, and also we do 100% cold wallet. So we're proven, at least from outside hacks, we are safe, right? I mean, other discussions around internal compliance, governance, putting that aside. We have 0 banks in Singapore, right? So it's not about KYC, AML, and as you mentioned, banks, for industries that they're not comfortable with, they'll close your account. They will close our customer's account as well. So it's not only the banks, our account, our larger customers' accounts will be shut down. That's why when you look at exchanges right now, the most recent ones are all crypto-only exchanges. But the government is going to deem crypto as fiat as well. So they'll start tracking and cracking down crypto-only exchanges as well. So it's just a matter of time.
Why is that?
And if I may add to that, it's actually absolutely true, because we've been considering ourselves as a self-regulated exchange from the day one, and we actually eventually acquired the bank compliance team from one of the largest international banks.
Do you hear as well, or we should speak louder, make mics louder? Do you hear us? No? Louder, please. Our microphone at maximum. I don't hear me. We need more power. We should kind of
sure,
speak.
no worries.
Oh,
And-
now it's better.
And yeah, we have very sophisticated QAC and AML, and more on top of that, we pass the independent compliance audit every single year. And to be honest, it doesn't help much with banking, really doesn't help much. And the other point is it's not regulators actually who pressure banks in order not to work with crypto, because as I said, we are talking to a lot of regulators across Europe specifically, and we even starting an initiative in the UK in order to work with FCA to pressure banks for them to work with the legitimate crypto businesses in the UK. So I think as for now, for us as a relatively big exchange, banking and keeping up with the demand are like 2 biggest problems right now.
So why banks close accounts?
It's actually
What's up?
Yeah, like to be quite clear here, like most of the liquidity when it comes to exchanging with fiat goes from the US dollars, right? And it's actually a pressure from the US banks on the European and Asian banks, because every single dollar transferred from one account to the other account, even within one country, goes through the correspondence bank in the US. And it's correspondence banks who are pressuring the smaller banks in Europe or wherever in the world. They just don't want to deal with crypto, basically.
Why not exchange that use euro? Why they use dollars then?
Yeah, we do. We actually kind of a fiat-friendly exchange. So we have euros, we have sterlings, we have dollars, we have rubles. But yeah, still, most of the liquidity is in US dollars.
Yeah. So if you use euro, you don't have problems with banks?
Euro is better,
Okay.
way better.
How about I describe recent changes in Korean cryptocurrency market? in terms of our government trying to reduce the amount of fund poured into cryptocurrency exchanges. Before January 30, any investor in any cryptocurrency investors in cryptocurrency exchanges could put money from any bank account. It was possible. Very interesting. So in Korea, we had a 40% premium comparing to global price. It was very high, so government was a little bit intimidated. So what they did was allowing customers to transfer their money only from his or her account from the cryptocurrency bank account. So now I can only use my bank account to deposit my Korean won into cryptocurrency exchange. That is understandable for KYC AML purpose. But Korean government went one step further. Hey, if you want to deposit your Korean won, you have to use exactly the same bank account with the exchange corporate bank account. I think it doesn't make sense. Looks like they want to reduce the amount of money poured into cryptocurrency exchanges. So after that event, in Korea, we have seen -5 to -10% premium. Huge drop in terms of a premium. So at this point, I think we are having almost 0 premium right now. But definitely, Korean people are having problem depositing Korean won into cryptocurrency exchanges. So one more last thing is, I'm a co-founder of Corbit, so I wanted to deposit my Korean won into the company I co-founded, but I couldn't because the Corbit exchange is using Shinhan Bank, and I didn't have a Shinhan Bank account. So I went to a bank and, hey, I want to create a new bank account. And they said, oh no, you can't because you created a bank account within recent 20 days. Then can I come back and create a bank account? Okay, you come later. But you still have a $1,000 limit per day. So to increase that limit, you have to wait for 3 months. And you have to provide your proof of income into the bank account, and you have to wait for 3 months. That is reducing amount of money poured into exchange. And I believe that last year Korea was leading the cryptocurrency market by the 40% premium, huge demand. But right now our demand decreased quite much. So recent drop of the cryptocurrency market could be related to Korean government's decision.
I think the regulation for the exchange will be coming in from 2 directions, right? First will be from the monetary authority, like MAS here, and in Hong Kong it's HAMA, and then also from the Security Commission, right? Because now what we talk about, the AML, all this KYC is more from the MA, the monetary authority, right? They're concerned about where the money is coming in, the cash flow. But now more and more we see regulation from the Security Exchange, right? In US, they literally go into a lot of exchange to take down a lot of tokens, which they consider security tokens, right? Even after they list, they take it down. And also, for example, what happened in China, so I think the Security Exchange will really go into to regulate the exchange of the requirement, what token can be listed and what cannot be listed, because this is the bottleneck and how they safeguard the investor. It's just like stock exchange, right? So now the exchange, I think they also need to be self-regulated, right, before the regulation come out, because a lot of the exchange, they're really very commercial driven, right? They will list any coins just to pay money. They ask for a lot of money, right? So now we see the industry, before from people making money from the mining, now people making money from the exchange. From the listing, it's ridiculous. Some of them charge like $1 million just to list a coin. But I think commercial is reasonable, it's okay. But apart from that, I think the exchange also need to be self-regulated to really just to focus on listing a good tokens, right?
Samson, I just wanted to add
Yeah.
is self-regulation will not be enough, right? For example, there was an incident in Japan 2 weeks ago where 500 million worth of NEM was stolen. They were supposedly self-regulating, right? So they can say one thing to the regulator, but they can do something different. So that's why the Japanese government and the governments will start saying you need an independent third-party auditor. When you look at Tether, they need an auditor to make sure that they have one-to-one. So self-regulation in itself will not be enough. And as you mentioned, it's not only two government parties coming to get you, there's tax authorities who are interested, they are the police, and all these people are coming in as well. So the cryptocurrency exchanges is going to be leading the regulatory and how the crypto market will evolve. Because if something happens with ICOs, for example in Japan, the government will come and get us. That's why it's actually okay for exchanges to ask for a registration fee that might be, I don't think it's high if it's $500,000 or 200,000, because what's going to happen is regulators are going to come and get us, right? So from that perspective, it's actually our responsibility to charge these amounts so that we can do independent study. If something happens, we delist it. So all these things we have to do, and also we need to work with auditors who check and balance. So that's how I look at it.
I would like to add some words on this. So I'm from 10x, co-founder and CEO. My name is Toby. We're not an exchange, but I see myself on this panel similar as the others as enablers of our ecosystem. So what we do is we allow you to spend cryptocurrencies using a real-world card. And I think we're talking a lot about the limitations that are on our ecosystem that are coming in terms of regulation, how we have to deal with banks. And I want to add my thoughts on how decentralized exchanges go into this. So right now, I think most people think in terms of decentralized exchanges simply as solving some of the problems that are still there, which I don't actually think are problems. Like you mentioned the security problems with CoinCheck. These are traditional problems of security. Banks have figured them out. So exchanges, as well as our solution, will just continue to improve. And what I think that decentralized exchanges actually can cater to are the limitations that are imposed on us on actually delivering new products. So when you talk about you don't list ICO tokens, there is a reason for that. You can't go that direction. So for me, the passion going into crypto, into blockchain, was always the long tail of innovation that can come out of that. It's like when you go traditional finance and you ask your bank to do something, they will only ever do that if that use case is really, really big, if there's another million users that want the same. And crypto and blockchain can do that in another way, because all you need is 5 guys somewhere come up with an idea and just build it. And that got me passionate in the beginning. And then the question is, where do decentralized exchanges come in? In my opinion, where they can really win is in the long tail of liquidity, is when you cannot be listed anymore, or when your token only has 5 people, or when you're building something completely abstruse for a group somewhere else. And I think that's where it's gonna get interesting. Like when we focus on the competition between decentralized exchanges and centralized exchanges, they're not gonna win simply because they might be better in security or something. They will only win when we find completely new use cases. And like at that, I would say our job here is really to be the enablers for that ecosystem, for exchanges to be the entry, for us being one of the exits of being able to really spend your crypto so you can stay in this ecosystem, so you can use the innovation that is coming. And I think we haven't seen much of that yet.
Thank you. Oh, now we have timer. We will be in time this time. So I think we will be able to take one question. Who wants to ask this? Yes, please.
Hi, I'm new to this, so bear with my question, but I'm very curious about what you think it will take for the big institutional investors to move into this space other than regulation. That's part one of the question. I mean, obviously it's gone fairly mainstream with retail investors, but I think when big institutions, BlackRock has recently still said cryptocurrencies are not an investable asset. So the first part of the question is, what will it take in this ecosystem for the big institutional investors to actually move in? And number two is, do you think governments will start to issue their own, cryptocurrencies?
I'll start out again. So institutional investors are already starting to come in, right? It started out from individuals, family offices, larger funds, hedge funds. They're all coming in. I get a lot of inquiries. There's many things they're concerned of, but the single biggest thing is around custodial services, right? Are their assets going to be safe? Is it segregated? Is there a trust bank? Is there insurance? Other than the regulation side, as you mentioned, that custody side is something that's extremely important to them, and being able to get money in, money out in an efficient way. So that's I think the single biggest thing, other than they're concerned about price manipulation, liquidity, all these things, right? So that's the first question, if anyone else wants to add in.
Yeah, sure. So I just want to support that because we originally positioned ourselves as the retailish exchange. And for the last 6 to 8 months, I would say, we see a lot of interest from the institutional investors also. So kind of custodial services is a big issue. We have to pass through the proper due diligence from their side in order to them to trade on our platform. We had a lot of meetings with like very old school institutional funds that are interested in this space. So I think when the regulation comes, we'll see more and more institutional investors coming to this space.
And for your question about the government coin, the sovereignty coin, actually in China, while they're also banning the ICO, the government is very aggressive, rolling out official yuan, the China digital money, right? Because the way they see it is the new generation, the younger millenniums in the future is all using a wallet. So they want in the wallet is really a share of wallet. In the future, when they open a digital wallet, there will be digital yuan in there. Right? So I think when they're taking a lead, I think many other governments is thinking about the same.
Yeah, so the last question, as we have 40 seconds.
Sorry. What's your main client? Who is your main clients? With the small people with the small checks, or I don't know, people who trade with a lot of big amounts of money?
So
Yeah, I can go again.
Yeah, I can.
It changed over time. In the beginning, it was the early adopters. They were ideology driven, and then it was also a lot of retail customers. Now and you need to look at it from your customer base or transaction volume base. When you look at transaction volume base, there's a lot of these hedge funds and professional traders and smaller family offices that are coming in. While when you look at the user base, it also has changed where there's a vast majority of younger generation that are coming in. And to them, cryptocurrency is more familiar than equities or bonds or any other asset classes.
I think this is the trend, not just with your exchange, but basically in the industry. So we see a lot of interest coming from the retail investors, like willing to invest like $500,000 into crypto. But we also see a rise of the interest from the institutional investors and family offices and guys with the bigger checks. So yeah, it's kind of both of the segments are growing, and the trend is obviously towards higher checks right now.
I want to use an example back in the dot-coms, right? If you remember, back in the dot-coms year 2000, when you open a newspaper, every day, somewhere in the headlines on the front page, it will tell you how many internet users in US, how many internet users in Japan and China. But that's silly, because one day we know everybody will be internet users. Now we talk about crypto cloud, all this crypto community, But eventually, one day, it's a portfolio investment. All of us are investors. We will have stock, we will have bonds, we will have forex, and we will have crypto. It's a portfolio management. I think so. Eventually, everybody invest will be a customer of crypto.
Yeah, so crypto exchanges are driving penetration of crypto into credit cards payments, exchange to other crypto, and hopefully to other asset classes. That's what LATOKEN is doing.